Interest on your mortgage. We all know it's important to negotiate the best possible price when purchasing a home, but many of us are not aware of the actual cost of that home and mortgage interest once it's all over and done with. So, your amortization period is the total length of time that it takes from day one of your mortgage to the final day of your mortgage where the loan is reduced down to zero. Um, Amortization period. Your term is a set period of time where your interest rate or your variable rate is locked in. Um, and some common terms would be a 1 year term, a 3 year term, a 5 year term. If you're locked in for a fixed rate, your rate is guaranteed for that term. If you're locked in for a variable rate, your rate can fluctuate over that term. And so you'll see a series of terms, and they will all add up to your amortization period when your loan is ultimately reduced to zero and the mortgage is paid off. There are some Government of Canada lending policies which changed recently, and I just thought I would highlight some of them, or really focus on one of them, which is the interest rate in this video anyways, but I could get to those in some other videos as well. So August 1st of this year, the Government of Canada made some changes allowing for 30-year insured mortgages, the amortization period for first-time buyers of new builds. This has changed. They're adding to it on December 15th. There'll be some additional changes. And I'm not knocking any of these policies. This actually probably will help get some new buyers, some Gen Z, millennial and Gen Z buyers into the market. I would just say err on the knowledge that making your minimum payments may not be the right move for you, but we'll get into it. We'll dig into that. Some other changes other than the 30-year AM coming back. And we've seen this before, by the way. We've seen as high as a 40-year amortization period, zero down mortgage. That was in 2007, I believe. I remember being in the business at that time, and that was some people would call it the never never mortgage because you're probably never going to pay that thing off. But anyways, so we're not at the 40-year AM. We're up to the 30-year AM now, to increase affordability for some buyers. There's a cap on insured mortgages, which was $1 million. It's been increased to 1.5. That's really for Toronto and Vancouver markets, in my opinion. Higher priced markets have driven that policy change. And then we'll get into this 30-year amortization. And there was another change that allows insured mortgage holders to switch lenders at renewal without being subject to another mortgage stress test or having to requalify. So essentially, you could roll over with your current lender without having to requalify, but maybe they're going to stick you with a higher rate. Whereas now it's looking like you're going to be able to shop that rate around just to make sure you're getting the best interest rate on your renewal of your term. But the purpose of this video is really getting into the 30-year amortization, which is available to all first-time buyers and all buyers of new builds. So my understanding is all first-time buyers, whether they're buying new build, they're buying resale homes, they will now qualify for the 30-year AM. And then all buyers of new builds will also qualify for that 30-year AM. So that's a change. It's going to make things a little bit more affordable. I'd like to break down a little scenario here just to show you what the actual cost of the interest on your mortgage might be if you hold it all the way to that 30-year AM. So we'll just flip over to the housing statistics here from the Calgary Real Estate Board, and we're going to run through, for the purpose of this demonstration, we're going to run through the benchmark price last month, which is September. We're in October this month. The benchmark price, September 2024, for a townhome is $459,200. And then I go over to my web page here, and we've got 459. So this is my website. It's actually got a handy little mortgage calculator, which I sometimes play with myself, actually, because of the way that it displays the information. I think it's quite nice. So shameless plug there. But anyways, here's the home price, and then we're going to get into your down payment is 5%, right? 5%. But we're not just going to put 5% down in here, because if you're doing a high ratio mortgage, and I'm sorry if I'm using complex terms, I'm doing my best to keep it as simple as possible. But essentially, if you're putting 5% down, I'm flipping over to CMHC, Canada Mortgage and Housing Corporation. They essentially provide mortgage insurance for lenders, and then we as borrowers graciously pay for that insurance for the lenders. And here is the table of fees. So if someone were to put down 5%, a down payment of 5% on a property, their CMHC premium is 4% here. So you put down 5 on your down payment, you're actually technically only putting down 1% because of this CMHC fee. So that's the number we're going to plug in here, is 1%. So significant amount of your down payment is eaten up with that CMHC fee right there. Now we're going to pop over to RBC, Royal Bank's website, and we are going to look at the 5-year fixed rate for high ratio mortgage. So that you do get a little bit better of a mortgage interest rate when it is high ratio. 4.44, that's the number we're going to use. We're plugging it in here, and drum roll, please. I'm going to calculate, and let's see. What do you think in your mind? What do you think the total interest is going to be over and above your purchase price here? Anyways, here it is calculating, and over 30 years of payments, it's going to add up to $823,411. This is web pages out of the US, so they calculate interest a little bit differently. They calculate it monthly, whereas in Canada we're calculating semi-annually. So there is a slight variation. I got it. It's about $4,000 more on my web page versus here's a Government of Canada calculator. I plugged in the same figures here, and it came up to 819 and change, whereas this one is 823. So they're close. Here's the schedule. You can just see your principal reduction here with the yellow line, and then the interest, and then when you're actually paying the principal down. So significant principal reduction towards the end of the loan, whereas the bulk of the payments early on are going to interest, right? So it's kind of fun to see. Fun and traumatizing, but if you know that information, then at least you can make some decisions on how you want to pay that down, because there are ways that you can pay your mortgage down faster. And so I will get into that in some other videos, but I just wanted to shed some light on this. Like, if you do carry this loan for 30 years, you make your minimum payments. The way this is over 80, I think it's 81% more than the cost of the home, right? You bought a townhouse, I paid $460 for it, right? Well, no, you're going to pay $820, according to this one, $820,000 for that $460,000 townhome. So that's the information. Bit shocking. I know over the years when I've gone into banks and wanted to get them to break down these schedules, they only really break it down in the term, a 5-year term, and you'd know kind of what you were paying over that term. I like to look at the amortization period, and I recommend people consider their entire amortization period when they're looking at a loan and looking at a property. just because you want to strategize with the big picture. You don't just want to take it 5 year or however many years your term is, just take it in bites like that, because you could end up paying a lot more on the interest than you actually need to. So that's the video. If you have questions, pop them in the comments section down below. And if you'd like to reach out to me directly and run something by me or scenario, I'm a real estate agent, not a mortgage representative, but I'm happy to. I've been in the business for a number of years. I'm happy to render my opinions and connect you with the right people, or dig up some information as well if it's something new for me. So that's that. And I hope you found this information helpful. All the best. Adios.